Link. We need the link.
Same place. Same link.
I gotta find it. Alrighty, we're live, guys.
There we go. We're live, baby.
Link.
Ladies and gentlemen, welcome
Same
to
place.
Magic Mondays.
Same
I'm Neil
link.
D'Souza. We've got Jason Vaz and Marlon Yee, man.
All right, we're live,
Back in
guys.
the
There we go.
house.
We're live, baby.
Link.
Boys.
Ladies and gentlemen, welcome
same
to
place.
Magic Mondays.
Why is it
We
playing?
got
Yeah.
feedback. 1 second. There we go.
Okay. All right, guys. This week on Magic Mondays, we got some super sick details for you guys. It's so sick that Marlon Yee man got COVID. No
Yes,
lie.
I did. Yes, I did.
That's
Glad to see you
why
guys.
he's at
Glad to
home.
see you guys.
We're in our offices. Don't worry, guys. We got sanitizer on deck. Everybody is safe.
Yeah, we're not safe from Jason, though, right, Marlon?
Yeah, that's for sure.
Nice. Well, look, we're so glad to have you back, Marlon. And you got anything you want to say about your time away, your vacation?
No, not really. I'm just glad to be back. Hopefully I'll be stronger in a couple of weeks too. So
Yeah.
Fantastic, man.
Well,
Fantastic.
I mean, hey, look, we're all dealing with this pandemic right now, and you having gone through it, is there anything that you can kind of say or share with us about it? Because let's be honest, there's a lot of uncertainty, and people may or may not know what to expect. Now, you having been through it, what can you? Come on, give us something.
I'd say, just take care of your body. I think I was working maybe a bit too hard and got a little too stressed out. My immunity kind of fell, I think, in the last couple of weeks, and all of a sudden I got it. I touched base with everyone I've been with in the last 2 weeks. None of them have tested positive. I'm the only one. So the only thing I could really chalk it up to is just maybe a weak immune system. So, definitely take your precautions, but definitely take care of your body, right? Get some rest when you need it, right? So,
Yeah.
Yeah.
Well, we knew you were weak, but I mean,
All right, let's get to our topic. I'm glad.
okay. Wait. Before we jump in, I know we're going to be talking about paying your mortgage down faster, but before we get into that, let's talk about a couple of things that are going on right now in the news. And I'm going to throw this at you guys. Good old cryptocurrency is dropping. What is it, Doggy Coin or Dodgy or however you pronounce it? It's dropping like a rock. You guys got anything to say about that?
I'll jump right on that. I'm not a fan of at all. And it's not because I don't have anything directly to say about it. It's lack of knowledge. Anybody that I know that's invested in this stuff knows very little about it. It seems like everyone just kind of, it's a tulip thing. We've all seen the if anyone's watched Wall Street Money Never Sleeps, they show you the tulip craze where there was no value in a tulip, but yet in Holland these guys were all racing to where a tulip could buy you a house. There's no intrinsic value of it, and then it crashed. It was the biggest bubble. It was the first bubble known to man, and that's what I see it as right now. Interesting little fact. I read an article on this. The big thing where a lot of these guys are jumping on cryptos was that Tesla was accepting Bitcoin to sell Teslas. They tried to do a transaction. It timed out because it took longer than 30 minutes to process the transaction. And the whole purpose behind it is that this is supposed to be a faster way to do transactions. So clearly that's a lie. I don't know. A bunch of guys are jumping on it. It took a dip after Saturday Night Live. I think that kind of shows you that it's a very volatile thing. Not for me.
Yeah. Well, I mean, Elon came out and, made a comment about it, and it took a further dive from what it was already doing. But anything you want to say about that, Marlon?
to be honest, I haven't been
offload?
following it, but I
your
would say,
position?
No, I would say, anything like that is always just, if you're going to invest in it, just make sure it's just a small part of your portfolio. It's a hedge, right? It's not a, well, I know I'm going to get flack for this, but in my opinion, it's not a real asset class yet. So, but it's just a hedge. So, I mean, don't put all your money in there and all that stuff. So, yeah.
Well, I don't think you're going to get much flack for that, because the reality is we don't have enough of a track record for it. As much as we may like the different features of it, it being decentralized, being the major key, the reality is that we just don't have enough of a track record. We don't know what lengths the government's will go to try to get involved or outlaw, crypto or any of those kind of things. That's a conversation for another day.
Well,
But
I'll just throw a little wrench in it just quickly. We know more about the Moderna and Pfizer vaccine than we really know about the whole cryptocurrency. So all you conspiracy theorists out there, just remember that.
okay, let's just jump on to the other question, which is we're starting to see all of these reports about inflation. Now all of a sudden, the banks are coming out and saying that they are concerned about inflation going rampant. They're worried that we actually need to raise interest rates on mortgages, and they think the Bank of Canada should reconsider what they're doing. And the Bank of Canada is even saying that they're not entirely sure, considering 2 months ago they just said, hey, we're going to keep rates extremely low for a couple of years.
I could tell you right now why I think they're saying this. Our counterparts in the U.S. have reopened for the most part. Most of their places, like California's reopened, they're not in lockdown. Very blue state for them to be open. Like all the red states have been open. We knew that. But yet we have Canada here that's in this like big circle of lockdowns, which requires subsidies to keep us afloat. When the Bank of Canada agreed that saying, hey, we're just going to keep printing money, they did it off the assumption that everyone in the world is doing that. So if we all go through hyperinflation, we don't go through inflation. But now that other countries are dialing it back, we're in trouble. So now, yeah, we do need to pull back. What they need to do is reopen everything, let it go. Like, hey, we had a good system in the summer of keeping people safe but staying open. Mm-hmm. And the reality is that they're printing like crazy. I think we have more debt than Greece right now. Just remember that. Greece.
Wow. Marlon, why are the banks taking this position as opposed to the Bank of Canada?
The banks are taking this position because, they want to protect their books, right? I mean, they have to take a look at what's going. I think they've had their fill of risk appetite out there. They actually same reasoning. They just want to protect their books. That's really what it comes down to. I mean, and the markets are getting kind of frothy. I think I can't remember if I shared a report with you, but I remember sharing with Jason. I think when we looked at the at how fast the prices have gone up in the market, it's replicating similar back to 2018, right? And so because of that, obviously a lot of official financial institutions are worried, right? So, yeah.
Yeah. Well, it's been a quick turnaround from just a couple of months ago when they were saying, "Hey, we're happy with this and we're ready to let it keep rolling," to now all of a sudden and it's interesting to me that the banks are the ones that are coming out with these reports. It's the banks that are coming out, and it's not the Bank of Canada hasn't come out and made that change to the statement, but rather the banks who normally are on board for all of this. Now, part of me is wondering if there isn't going to be a request for more insured mortgages so that they don't have to bear that risk. But I don't know. That's just speculation.
That would make sense. Yeah.
All right. Well, that'll bear some more watching. Oh, Jason's got a big smile on his face. What?
I do. I'm excited. I'm excited for what we're about to talk about next. The topic of discussion.
All right. Okay. Well, look, let's get to it. So what we said we wanted to dive into this week was how to pay your mortgage off quicker, ways that you can pay down your mortgage. What are some of the ways that you guys want to tackle? Where do you guys want to start with that one?
So, I mean, I can cover the traditional ways. I mean, although we're all of a different mindset here, but we'll cover the typical ways.
Give us some sanity, Marlon, before
I'll give you the rules of the games, or the so-called rules of the game so far.
The
right?
rules of the game. Okay, perfect.
So when you have a mortgage, you do have the ability to prepay your mortgage. Okay. Yeah. So you can prepay your mortgage in terms of increasing your monthly payment or doing a lump sum payment. Right? The only key thing you got to look out for in some of these cases is how often can you do this? Some lenders only allow you to do it on a calendar year. Some will allow you to do any time through the year. So there's a little bit of a flexibility difference there. Some lenders will up to allow you to double your monthly payments. Others will allow you only up to 15 to 20% of your monthly payment. That's a pretty standard way to increase your monthly payments and to prepay your mortgage. Now, being who we are, we all know that, we think outside of the box. We like to, I personally like to show people how to build generational wealth with their real estate, how to put that equity to work. So, coming from a private lending background like yourself as well, Jason, you guys want to talk about, how do you use all that equity that you use in your property to pay down your mortgage or even finance your lifestyle in a specific way, right?
Okay,
So,
wait, hang on. Just before we jump into that, I know he's revving to go, but Marlon, why is it that the banks only allow us to put a certain amount down onto those mortgages? Why do they cap it at these 10, 15%? Why do they do these?
I think it just wouldn't be a profitable product if you were allowed to pay down more. I mean, if let's just say hypothetically you did have 20% every year, you could pay off your mortgage in 5 years, right? Most mortgages are profitable after year 3. So I mean, 15, 20% is quite a bit. Not many people can put that down every year. So,
Right,
yeah.
right. Which would make you think that, hey, it's a small segment of the population that would even be able to do it, so why not allow it? But instead, we know that there actually have rules there where you're not allowed to pay down more than a certain amount.
Correct. Yeah.
Okay. All right. So now, go ahead, Jason. What do you got? What do you got for us? We're Magic Mondays. We want to hear the magic.
All right, guys, on this Magic Monday special, I am going to tell you guys to be the bank so you can beat the bank. So,
Okay, be the bank so you can beat the bank. Now, I like where this is going. All right. What do you
guys,
got?
if you are in Southern Ontario and if you have been living under a rock, this might be news to you. Property values have gone up exponentially.
Where have property values gone up?
All right, Neil, I'm going to remove the rock so you can see the light. All right. So it's not uncommon for someone to have bought a home, say in 2016 for say 500,000. That same home now goes for about 850 to even 900,000. Now, what are you stuck there? You're happy because your home's worth more, but it's unrealized gains. This is money you can't touch it. You can't do anything with it, but you can. So what I recommend my clients to do when they see huge amounts of equity is to do one of two things. We're going to just talk about one today. So either one is to pull the equity and buy an investment property, but today, just to pay off your mortgage quicker, what we're going to suggest you do is you can pull out that money and now you can become a lender. Now, here's the cool thing. As Marlon and Neil can share with you, when you are a private lender, you are able to lend that money out at a far greater interest rate than what you are borrowing it at. Right now, you're borrowing at what, 2.5%, give or take on a refi, maybe 3%, but you're lending it at 12. So what you do is you pull out all the equity you can, the full amount, because the reality is that when you're lending it out, that person who you lend it out to is now paying you enough to pay back what you lent it for, and you get a pretty healthy profit. Now you can utilize that to make these advanced payments that Marlon shared with us earlier, but you don't have to work for that money. It becomes a vehicle that works for you. Now, I'm going to let Marlon jump in on what those numbers kind of look like, just because, hey, I'm yelling out percentages and stuff, and it's easy to get lost in the numbers, guys. Very easy. Marlon's a lot better at that than I am. So I'm going to tip it off to you, Marlon. Show these people how they can be the bank so they can beat the bank.
Okay, so I don't have to.
Wait, Marlon, hang on one second. Yeah. Let's just recap what he said there because I think that. So what you're saying, Jason, is with the equity that people have just seen grow in their properties because of price appreciation. Property values have gone up so much. Access the equity in your home is what we're talking about. Utilize the equity in your home and put it into an investment to make a greater return. We got that? And now Marlon's going to give us a little bit of breakdown. All right, we got that. Okay, Marlon, hit us.
So, I mean, it's some typical math. It's just very basic. So, for every $100,000 that you lend out at, private rates, typically a private rate around 12% for a second mortgage. So we're just going to go very plain vanilla. Second mortgage means that, it's a mortgage, basically that's behind a first mortgage or a bank already. Someone's borrowing a second mortgage to do, say, renovations of their home, or to, whatever it may be, pay off some bad debt. So every 100,000 that you lend to this person generates about $1,000 in cash flow per month. So let's say in Jason's example, let's say you're to take out 200,000 from your home, even if that makes sense, but let's just say 200,000, that's $2,000 per month. You can do $2,000 per month. You can just start paying back down your mortgage prepayments. You can use that to finance a new car. You can use that to finance family vacations, however it is. You become the bank, you become the lender, right? Typically, Jason talked about taking equity of the home. Sometimes I find clients who want to become private lenders or people who have saved up down payment for a home, but they just don't have enough down payment. So they come to me saying, how can I build this faster? Or how can I get into the other home? And I said, unfortunately, you can't build it that fast because, for example, you only have 90,000, but I can lend the 90,000 for you at 12% to generate income for you that can, help you save up a little bit faster, but it's going to take time. So there's different ways we can use this tool, but I mean, it's a great tool, private lending, for anybody who owns a home or anyone who doesn't even own a home. If you are sitting on cash, but you just don't know what to do with it, you can now become the bank and make a handsome profit, cash flow wise.
Yeah, absolutely. I mean, obviously the private lending is my specialty, and this is what we talk about. And, one of the things I'd like to just point out as you bring this up, I think what you pointed out earlier, Marlon, about, hey, what are some regular vanilla ways to pay off your mortgage faster? You can make extra payments, change your payments. Instead of doing once a month, doing bi-weekly, you get extra payments in there for the months that you can get, 2 extra payments a year. Add in extra amounts. These are very simple, no-brainer ways to pay off your mortgage. And then, of course, we didn't even mention, of course, you can shorten up your term, right? The term of you're amortizing, so that you're making a larger payment on a monthly basis, but then you're going to be paying your mortgage off quicker, in which case you're paying less interest over the long term. Now, on the other side, which is the investment side, I'm with you completely. If you are a person looking to, hey, how can I build? Then this is right up the alley in terms of private lending or some other type of investment. Now, I know this question, but I'm going to throw this out here to you guys. So how would someone take that money? How would they access that equity and then be able to do that?
So I'll jump on this. What you do is you could do one of two things. If you've got a conventional mortgage with your bank, right now refinancing is a little bit difficult. Both of you guys can attest to that. It's taking about 2 months to pull that out. So what you'll end up doing is you either I would suggest connect with your broker. They've got a lot more options at their fingertips. But they're going to refinance. They're going to restructure it. Ideally, you want it to be at the end of your term, but it doesn't have to be. You could be 2 years into your term. You bought a house for 500, it's skyrocketed, and you're in the middle of your term. It might be in your best interest to pull that money out now. So you're going to call your broker and say, hey, I want this money, and they're going to get it for you. Plain and simple.
Yeah, what? Oh, are you trying to say something there, Marlon?
No. I was going to say, yeah, obviously the easiest way to get the money out is through equity, right? So, some people do it through a standard refinance, through a fixed mortgage or variable, but don't forget, you always have what they call the home equity line of credit as well, which is a line of credit which can be reused against the home, right? Especially if you tend to keep using the money back and forth. That's also a good option.
Yeah. And one of the things that, one of the products out there that if you're able to qualify for it, that I really recommend, and who knows, other lenders may do it. I'm not getting paid by them to do this, but there's a product by Manulife One, really interesting product that actually allows your entire mortgage to be or most of your mortgage, sorry, let me correct that, most of your mortgage to be reusable as you pay it down. It's a really interesting structure. Get your agent, contact Marlon Yee and he'll get you hooked up with that. But it's a really interesting product to be able to make your mortgage to tax deduction, and be able to pay it off quicker. That's one of the there's entire spreadsheets that people have created to be able to pay off your mortgage quicker. But you're right; those are some of the best ways. Now, when you're talking about using private lending, now we're going, okay, like let's get into, is that the only option, doing private lending? Is there another way that we can, what if someone doesn't have that comfortability? Is there some other way that they can use that equity?
Marlon would probably be best suited to answer that question. What would be a safer route? Like, because say they don't want to do that. Say they're newbies. Do we have any other products out there for them that they can utilize? It may not be the same returns, but it might be something a little bit within their comfort zone.
Well, I'm also a registered financial advisor. So, I mean, if we're talking outside of mortgages and refinancing and stuff like that, there's mutual funds, ETFs, very standard stuff, right? So those are ways that you could take the money out as well, invest it into that. Some of these ETFs and mutual funds do like dividends, interest income, nowhere as lucrative as private lending, but sometimes it's just to get your feet wet, right? To get a little taste. And then as you get more comfortable, then we can start to shift some of your risk onto the other side.
So Marlon, one of the things I wanted to touch on, maybe you can explain more, is what about pooling their money in? Like, what if you've got guys that have 20 grand, they've got a little bit of cash, maybe it's not the equity in their home, it's cash they've saved up. Right. And the three of us, like, hey, I've got 33,000, Neil's got 33,000, you've got 33,000. Is it possible to pool that in even with other investors?
Yeah, and that's what I was trying to say earlier. And you don't necessarily have to take the equity out. You don't necessarily have to be a homeowner to be a private lender, basically.
Yeah.
Right. You could be a person who just has some cash. You could have a bunch of friends that are interested in it. You can definitely do what they call a syndicated mortgage. So if someone needs a private mortgage, all three of you could come together. All three of you would be on that private mortgage as the lender. And you get your each split based on the interest rate and all that. So yeah, there's definitely ways to go around it. You don't necessarily have to have tons of money sitting around. You can definitely set it up with a syndicated mortgage.
Okay. Yeah, and on top of that, you can, if you've got an RRSP, some type of registered saving, TFSA, any of these kind of things, these can all be used to put towards a private mortgage. For you to be the bank. There's authorized registered trust companies that are out there that will administer those funds. You'll be able to put them together. If you've got a bunch of family members, you can join together, just as you mentioned, Marlon, and then you can lend out that money, get a higher rate of return, and it's a secured investment, which is really, for me, that's when I'm talking aside, when I'm doing webinars, seminars, any of those kind of things, and people are asking me about it. That's what I talk about, is you're talking about a secured investment. Real estate is there, and then you're able to grow at a faster rate, and then be able to use that money to pay down your mortgage, buy another property, all of these kind of things, right?
Jason's Googling something.
I just sharing on Instagram.
Yeah, there he is. We got notices on Instagram, but absolutely. I mean, I think the key of what we're talking about here is that when it comes to paying down your mortgage, you can get into trying to save more and make larger payments, right? Everybody understands that. Cut a little bit off of the extra spending, and especially right now, while we are in COVID and you're not able to. Now is the time to redefine your budget, to figure that out. And it's the easiest thing you can do is put a little bit more onto your mortgage payments every month. Now, or you can do the other side, which I would actually say is a much better option, is to put that money into an investment. Now, whether you do that through, Marlon, as you mentioned, some traditional types of investments, or you do it into private lending, which can yield you a higher return. Either way, that money is growing faster than if you were just to, put the money aside in the bank and try to make those payments. I actually think that's the better way, is to raise your investments and then have that pay off your home, your mortgage.
It is the way to do it, guys. And the thing is, people need to understand this is you're buying your first home. It is scary. You're taking on 25 to 30 years of debt. And it is usually your biggest expense, household expense, is paying this mortgage down. And there's no worse feeling when you're like, okay, fast forward when you buy a house today for say 900,000, fast forward to 10 years when it's worth 1.5, $2 million. You got all this equity you can't use. You can't do anything with it. And if you touch it, it's all you're doing is just increasing your expenses, because the reality is in 15 years, you might be making a little bit more on your annual income, but it's not going to be enough to make up for that. Mm-hmm. So using that strategically it's a no-brainer. And it's unfortunate because this is stuff that we need to teach people because they're not teaching this anywhere else. Yeah. Nobody knows about this.
Well, here, let me add, because we just talked about a couple of different ways. And, with the last couple of minutes that we have here, Jason, can we also talk about other ways, like, for instance, which we haven't touched on, when they're buying a house, buying a place which they can either build, like a garden suite, something like that, or, something that has perhaps a basement apartment or other ways that they can help pay it down. Because obviously being a realtor, you're able to talk about that.
100%. So I'm a huge believer in house hacking. I'm a house hacker myself. So I'm always going to be an advocate for that. There's just a couple rules you got to follow. All right. So say you're going to do the traditional, the old is gold. I'm going to buy a house. I'm going to build a basement apartment and rent it out. You're going to want to make sure that you're making it legal. Here in Southern Ontario, very strict laws, and you want to make sure that is a completely legal basement apartment. Two reasons for that. One, you don't want to get in trouble, but two, when you go to sell that property or refinance it or do anything of that nature, you can utilize that income to help benefit and facilitate it. In fact, I'd recently purchased a property that I got legalized, and it got appraised higher on the simple fact that I had the legal basement apartment. So 100%, Neil and Marlon, yes. You want a house hack. You want to utilize that. If it fits your lifestyle. I'm a single guy, so it's easy for me to do it. Maybe if I had, 3 kids, maybe not. But if it's in your realm of things to do, you want to look for those opportunities. You want to say, hey, is there a space for me to rent out? You may not need it to qualify, but you'll be surprised that extra income coming in, it will generate wealth for you.
Yeah, absolutely. And then for old guys like myself that can't take a piece of your house and and rent it out, there is options like private lending, where now all of a sudden, whether you're investing it in a first or second mortgage, a first mortgages these days are around 8%. If you're borrowing a HELOC, you've got a home equity line of credit, and you're using that at 3%, and you're getting paid 8%. You're making 5% on top of that, right? Yeah. So even on the low end, on the low risk end, you're still.
And you guys can attest to this. Like, this is not like buying a home and renting it out where you have to manage the property and be a landlord and take care of your tenants. This is very hands-free. This is leave it and don't think about it.
And that's the key right there, is that
no cost.
if you're right now as a young guy, you've got the opportunity, the ability to be able to manage, right? Mm-hmm. But if someone's out there and you don't have, if you're listening right now and you don't have that ability to be able to manage, or you're just learning, you can always go the other route.
Exactly.
Yeah. Well, guys, listen, this was, the time went by. It flew by. Guys, anyone, if you're checking us out, you can go hit us up on social media, whether you can find us on YouTube at Leadership to Wealth, or you can hit up Jason or Marlon on Instagram and Facebook. If they're hitting you up on Instagram, where are they gonna find you, Jason?
You're gonna find me at Jason Vaz Real Estate. That's the @ Jason Vaz Real.
Marlon?
I'm loving that mic. If you guys want to hit me up on Instagram, it's at Marlon_mortgage. And if you're on TikTok, it's Marlon Man. That's it.
But it is Marlon Yee, man.
Marlon Yee. Well,
Yeah.
guys, thank you very much for another great Magic Monday. We'll see you guys next